So the struggle continues with gold, silver, and the miners. Let's quickly look at what happened yesterday. DXY. Now, some trend line I actually missed the first time, and I just noticed it after posting my last video. This descending one here could be relevant. You can see so far it has touched now twice. So, because I didn't see a trend line, last time we were up here, I thought we're going to go to 104. I still think 104 is stronger resistance, but actually it'd be better if it's stalled here, of course. But this one should count, and I should have seen it. But anyway, the point is, it's pretty much 103.5. Otherwise, you can say 103.65. So let's see on a daily basis if we close below this. So we could always pop our head above, but as long as we close below, this should remain a daily resistance, descending, sloping resistance, and then we can come back down again. And if we do come back down again, this area here, it's either this breakout zone of 102.6 or the low when we were consolidating sideways of 102. So yeah, those are the levels that I'm looking at now. Now, if we do take this out on a close basis, on a daily close basis, then it'll be all the way up here. I've got 104.2 something. So that's what I'm looking at. I don't want to go through the individual currencies. I mean, I just, Euro US dollar, which is the heaviest weighting. I don't really see much support here where we are. So if we could go up, then this should be resistance, the ascending that we've just lost. So by the time we get there, 109-ish, 109.7, almost 110, definitely 110 if we do get there. But on the way down, probably here. US dollar, Japanese yen looks like it can go a little higher, 150. The others don't matter too much. The weighting isn't that strong either. But this one can go either way. Support roughly here, 126. Canadian dollar, nothing too special. But the point is DXY, it's this little sloping trend line I want to bring to everyone's attention. So let's see what happens. Now, yields really are just as important. I see them going a little higher. Look at the 1 year, maybe it wants to break out of this little descending, could go a little higher, maybe test 5% or just below 5. I see 495 as a bit of mini resistance if we do keep going. So 1 year wants to go a little higher. The 2 year, I think, also wants to go a little higher, maybe all the way up here, test 4.5-ish. I don't know if it's going to be here, 4.49 or 4.5, but I see a little move up there. And if we do get all the way up there, it's descending. So 4.5 should be resistance if we do go higher. The 2 year will definitely matter. 5 year, I think that wants to take this out, just close above it. For now, this is still resistance to 4.1, but I think it will pop above. If we do, maybe 4.3. Got to, consider that. The 10 year has done what I think the 5 year wants to do. And that's go up to this horizontal 4.3-ish zone, maybe. And the 30 year is doing what the 10 year is trying to do also. So, the 30 years ahead. And that I think wants to reach this level, which should be pretty much inevitable, 4.45, whatever. Yeah, 4.45. So you see what I mean? 30 year is a little more advanced. That keeps going. 10 year wants to do what the 30 year is doing. 5 year wants to do what the 10 year is doing. 2 year wants to do, well, it's not going to be able to do exactly what the 5 years done. Well, let's see. They want to go up. Yields want to go up. The DXY, just to recap, right? DXY does have this little resistance. If we close above it, it wants to go up here, and it probably will close above it if the yields keep going up. So yeah, you got to pay attention to that if you're looking at gold and silver, which is what I'm doing in this video. Let's look at gold and silver because they actually did quite well yesterday. Now, I don't see any trend line for 2000 besides the mental one. Everyone likes the big round number, and I know big banks like big round numbers and all this. So I guess we can take some comfort in the fact that we didn't close below 2000 and we did bounce pretty good. Now we're back in this. I think this counts, this horizontal one here. We also retested the ascending. Funny how that matters. But we closed, above 2015. For me, it was 2015, 2010, that kind of range. That was previous support. So we're back above it. And we need to get back into this ascending zone. At the moment, it's acting as resistance. So these technicals are nice. So let's see what happens. Of course, silver, but it was up like, how much was it up? I didn't even notice. I didn't pay attention, but we opened basically 1% move in gold. Pretty significant stuff. And we'll get to the miners because they did not outperform at all. Silver did well too. Look at this. Dipped its, I like this, dipping its toes below the support, but closing substantially above it. So this is holding. I still see 22.5 as a good support. I mean, clearly is a support, and it closed significantly above it. So it's good. It's good for now. Let's see if we can hold. We need gold and silver to hold their respective support levels now. However, the miners, they were underperforming. I mean, they were pretty much closing unchanged. And when you got gold and silver up a decent amount, that's poor. Now, for me, it's because the chart is so destroyed. You can't really have. I mean, you can, but I can understand why they underperformed because the chart was severely destroyed. Look at this. Some of them probably want to retest their support zones and then start to curl and go back up. We've got this little gap fill here. So GDXJ at least, yeah, underperformed. I prefer it when gold and silver are down and the miners are up, right? Here we had kind of a worse scenario. I mean, I don't know if I would have preferred the miners to be red yesterday because I've already suffered a bit, but when gold and silver are up and the miners are down, if you're holding miners, that's the worst case scenario. If, however, gold and silver are going down and your miners are up, that's great because imagine how good they'll do when gold and silver are up. So not the best, but I understand because they need to stabilize and go back up. So here we look like we've got a bit of support at 33.5. Okay, so I'm gonna have to add a level because it is what it is. These two tails, I don't know if it's before the gap here, kind of makes a bit of sense. Adapt. GDX, same thing in the middle of a gap. No, it's just closed the gap. So that also, yeah, okay, it's gap stuff. So before the gap on GDXJ and on GDX, the gap was filled. And remember, GDX is like Newmont led the way down, I think. The day before the flush, it was down, or maybe 1 or 2 days, it sort of went down 4%. Not even sure why. And then Barrick Gold at a 10% drop. And I think these two they heavily weight the GDX and the miners overall. Them going down just destroys the chart. Something like this destroys the chart and they just have to keep going down. So I don't know if it's individual miners that ruined it, but the point is the markets haven't exactly been flushing, and it's like the miners have underperformed everything, underperformed the metals, and you think, okay, maybe the market's going down, so that's why, but not really. Or maybe the market's going up and not really. It's just so they just underperformed. And I don't know if I should just blame 1 or 2 individual miners that ruined the chart, but it is what it is. So here, GDX, we closed this gap. You can see we're bouncing okay. Not the best day for gold and silver being up 1%, but still we're finding our feet. And then just like GDXJ, this gap will be resistance. So I don't know whether it's going to be here or there. Doesn't matter. I'll just do an average like that. Sometimes I do that. So GDX resistance will be here. I think we can look at resistance now. We should have a bounce really. If we don't, down here, let's be honest, I think we should start to outperform though now. There'll be a day, I think, miners will start to go green when the metals are red, something like that. I'd expect that because this has been pretty strong. That's GDX. GDXJ, same thing. Yes, this, I don't know whether it's here or there. Let's just do the middle point, something like this. And then resistance will be here. SILJ, here it's got its own little gap. Is that it? I don't know, but it seems to coincide quite well. Let's just say this is the level you can see, between these two candles. The resistance won't be here. This is too close. It's just too close. I'm going to get rid of this. I want to say it's here, prior support. If we go lower, then I don't think we're going to go much lower, so I'll have to look for the nearest thing and probably this candle here. I'm going to take a guess, I think, and it's 8.5-ish. Nice round number. There you go. That's what I'm looking at. Let's see if the luck can turn. I don't like to count on luck, but I do expect a bit of a bounce imminently because we've been destroyed. So there you go. That's what I'm looking at. Good luck. It's Friday. Let's look at weekly candles on the weekend and the portfolio update video, which I am and I am not looking forward to, let's say. Oh, on a different note, I liquidated juniors. I hold 4 juniors and I never cover my juniors because not many people follow the same juniors. I don't like juniors, and they're just juniors I held for a long time. They were called Rainer Silver, Turmalina. One of them was renamed to Renegade Gold, and the other one is Silver Tiger. And that was the latest edition. But anyway, I liquidated them 2 days ago or 2 days ago because they were down. I wasn't, and basically it was more like a portfolio strategic decision. And I just thought, I don't need to hold these. I prefer that money in senior stocks. And to be honest, they were down less than some of the seniors. I thought, okay, relatively speaking, it's it's like I'm outperforming the juniors are outperforming some of these amazing seniors that are getting crushed. So let me just use this opportunity to get rid of them. I'll try and cover that in my portfolio update. Anyway, good luck today.